Sorry, we did not get to finish that song. Just want to introduce Jack and Norman, both stock market veterans. They will be walking us through how to pull weekly income from the markets. This week's show, we're going to be covering why Jack's top technique is income trading. And stick around towards the end. He's going to be telling us his #1 tip for new income traders. Jack and Norman, take it away.
Thank you. Listen, you still got that cigar going, Jack. I think I left you with that cigar. But Dave, before you go, I just want to let you know that if you need a 2-minute song, exactly, the Box Tops, give me a ticket for an airplane. The letter by the Box Tops fits right in here. Exactly 2 minutes.
That is perfect. I will add it to next week's rotation.
Okay, great.
Thank you.
Jack, great to see you again. Oh, got you muted.
You know, it's always something. Hey, first things first, I want to thank you for being on here, Norman, but I also think we all ought to give it up for D.A. Gutierrez. He created this show and he's producing it. And I just want to thank him for doing that. The guy's a great guy, and everybody on here should really appreciate DA and Norman. So we don't have a script. We're not going to read a PowerPoint. We're just going to talk, and hopefully you guys will get a lot of great tips and information, and we'll start off right there. So Norman, why don't you introduce yourself and give them a little background on yourself, and then I'll do the same thing, and then we'll get right into it.
Yeah, I'm so glad that you guys invited me to be in this series, because it's a little bit new of a format. You know, we're just going to kind of exude our experience for whatever that's worth. But I think especially new traders and traders that are struggling, they're going to find some of the things that we talk about very helpful to them. I mean, why make the same mistakes and that we've made, and then zoom in? You might as well zoom in on the simple and important things. And I think we're going to talk a lot about simplicity and really the beauty of options. We both have experience, of course, Jack, a little bit deeper in options, but my depth of experience really over the last 20 years has been the mental and emotional part of trading. In fact, the parent company of the disciplined trader is called Subconscious Training Corporation. And we used to actually produce software for professional golfers who still use our software, tennis players, students for better memory and test taking and so on. So about 20 years ago, I asked the brains of the outfit, my wife Tisha, who is a very famous subconscious trainer, to join me and concentrate on helping traders. But you can't take the trader out of the trader. And although you know, I respect and have enveloped all of the disciplines that I teach, I'm just looking at charts and trading, and I guess my love for options has always been there from my early days back when I started in 1980 with a large option firm. My appreciation for the option really, I thought, made me a pretty good match for this, and you know, Jack's depth of knowledge and his real experience trading options is really I think it's going to be a really fun combination. Plus, Jack's got a great personality too.
Yeah. So tell him, you got started with Payne Weber. Like, what year was that?
I got started with Payne Weber that was in 89. I started with Payne Weber, 1989. They had me as a commodity specialist. I was, in the beginning, I was helping guide and raise money for their commodity trading advisor. They started a whole new managed account, and I had been a commodity trading advisor. They wanted my experience to help one of their more experienced traders who wasn't so familiar with how to work the futures, but use his techniques. Anyway, I wound up the trader wasn't a very good trader. Within about 2 months, he had lost about 15% of people's money. All of a sudden, they wanted me on the phone selling mutual funds. I said, no, this is not what I signed up for. Let's get back into my own thing. So I started my own commodity trading advisory, which led to the importance of the mental and emotional part, where my wife was helping me with my mental and emotional during that period of time. And you know, those were good days, because at that time we were making 20% of whatever we we earn for people. But it was very strenuous, but the focus on the mental part really is what I came out of that experience with, and then created the Disciplined Trader, which really focuses on that. So that's really where I'm from and where I'm at. But again, in the morning, I'm checking the charts. I'm still a technical trader. You really, once you have success, and I think people don't really realize that, Jackson, once you have success in trading, that struggle and angst turns to joy and excitement. But it really is all about having a decent system and following it. And the idea of income, which I think we're going to talk a lot about today in our 30 minutes, the idea of income, I think, is not as appreciated as it should be, because that steady income allows some of the greater speculation, because you have that income coming in. So really, income should be first, and then some more speculative stuff.
Yeah, I agree. Totally. That's what I do. But I found it interesting. You talked about when they wanted you to sell mutual funds, you said no thanks. And I started in '84. I was with Dean Witter for exactly 1 year, and I got fired exactly 1 year later for not selling enough mutual funds. They had a quota, and we were just telemarketers. If you made 300 calls a day, blah, 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 you'd get so many. And I couldn't do it. I got fired. And then I got hired as an assistant to the head trader of a NASDAQ market making firm. And the only reason I got that job was because I had the Series 7 license, so I could be inside there. And that changed everything for me. I couldn't sell over the telephone, but I learned to trade pretty good. And it's ironic that I went from the market making side and the fast money hedge fund side to now completely the opposite. I'm on the income side. So, I tell people that if day trading were that great, I'd still be doing it, but this is far easier what I'm doing now and far less time consuming. And I don't have nearly as much emotion and angst and anger in my life because I'm not looking for that short-term big gain.
I wrote this down. I thought, it was, I think it was in the lead banner that was up. It said most people go through their whole life never really understanding options, even though it really has a safety valve really like no other, especially when you work in combinations like you do. Why do you think that is? Is it that unpredictable transitional value of the value of the option, that extrinsic value, that time and momentum value that seems to kind of come and go sometimes on its own? What is the resistance to options that people have from an understanding standpoint?
They see it just through one lens, and the way everybody's taught, even I was that the reason you would buy an option is because you want a bigger bang for your buck than you would on the stock. Each option contract controls 100 shares of stock, so you could put $500 into a little option on Tesla, but you wouldn't even get 2 shares of Tesla for $500. So it's a cheaper entry. It has a bigger bang for its buck, and they're blinded by that, because the odds when you buy an option, that's automatically going against you about 85% odds that you will not succeed, that when you buy that option, you'll lose 100% of it 85% of the time. And people don't look at the stats of the numbers. They just look at the greed side, and I've done it before, and it's something you could get hooked on bad. You buy an option, $5,000 of options turns into 25 grand. That's the dream. But the reality is it doesn't happen that way. And people just keep banging their head on the buy side of the options rather than taking just 15 minutes even to consider what's on the other side of that trade, because all options are a zero-sum game. So for every buyer, there's a seller. So if buyers are losing 85% of the time, sellers are winning 85% of the time. And the wins are smaller, but they're so much more consistent over time that, it's just unbelievable. So they never really look at the sell side, and that's because they really don't ever totally understand options. Just the fact that
when you say sell side, you mean selling premium and
selling premium, selling, calls, credit spreads, naked puts, anything that puts you on the sell side of the option where you're receiving that premium hits your account instantly. And the thing that really kills it is time decay. You know, when I switched from the buy side to the sell side, I was thinking to myself, I'm selling these options for crazy high prices and they expire worthless within a week. And I don't know anything else in business, maybe fruit and vegetables, where you can sell something to somebody while it has some value, and then 5 days later, it has zero value, none. And that time decay, man, that is a monster in the options market. That's the beast. And people don't even know what time decay is. And that's why they're getting killed whenever they on the buy side. So,
well, you know, with the advent of just in the last, I guess, 5 or 6 years, they've come out with these much shorter weekly options and even daily, you know, where you, I mean, if you had to describe those very short-term options in one word, what would it be?
sucker money. Now,
I'll put a dash in there. That's good.
I'll tell you something interesting that you bring that up. So earlier this year, we were doing a study, and the Wall Street firms that had invested in stock pulled out about 175 trillion out of, or some crazy number out of positions in stocks to solely focus on these 0 days till expiration options. And they were 100% on the sell side of these. They were never buying these 0 DTE options, but the retail traders lost $389 million in this one short period, and they all lost. And so the 0 data expiration option is just such a, it's a lottery ticket, you know, and people are just throwing away 389 million bucks right there. So if
you're going to do it, be a seller.
Yeah, the get rich quick, the options are the get rich quick format that people think about, but I'm telling you, the other side is where the money's at.
Well, the blindness of the blinding of the leverage is really, you know, I actually started my career in 1979, and in the last October of 79, gold went to, and I started in an option firm. At that time, there weren't exchange traded options. All we could do is buy puts and buy calls. That was it.
Yeah.
And we did them out of a Makata Metals Corporation, which was they're still one of the largest independently held companies in the world. They warehouse gold and silver. We actually wrote options on the actual metals. And I remember that's where, you know, in January, I think 3 months later, after I started, 2 or 3 months, the turn of the year in 1980, that's when gold went to $850 and silver went to $50 with the Hunt brothers. People who invested $10,000 with me at that time, and I had 3 of them. At that time, they had $150,000, $160,000 with that leverage. Of course, nobody took it because then they thought, hey, this could be $1 million if we. They were then talking, you know, $1 million gold, and of course they did wind up taking it out at about $20,000. They doubled their money, but the idea is that was probably the worst experience that anybody could have. You know, seeing the power of it and then wanting that more and more, as opposed to, I think more, I know professional traders have come to it, the work that you do with selling premium and just continuing to look for ways to put money into the account as opposed to risking money. I mean, that's really the topic of today, right?
Yep, it could be, yeah. That's the cool thing about it. The CBOE guarantees the money instantly hits your account when you sell options. So you know upfront what you're going to make, you know upfront how much you can lose, and you got 3 exit strategies depending upon what the stock does between the time you put the trade on until the time it ends. And you always know your break even. And that's impossible to do with a stock. You know, it's hard now to make a directional trade because we don't see a lot of follow through on these individual stocks. So I also think that income trading is way easier than directional trading, where you're trying to predict whether a stock is going to go up or down, because you know everything right up front in the trade.
Which of course leads to the question: which is the topic for today? Income trading. What is that about? How can?
So when you think about your normal stock trader, that's like trading. You're trading for a capital gain. That's your goal, to get a gain, and that's a capital gain. And when you're trading for income, you're using that stock as an asset to apply an option strategy that would allow you to bring income the very day you place that trade. So it could be like for these weekly options, I like to get into this trade on Tuesday for Friday's expiration. And for example, this week I used Meta, META, and I don't know where it is now, 309 or something like that. But what's crazy that people don't realize is if you look at an options chain, which is all the options with all the expiration dates, that's a list of money that they're willing to pay you to make that transaction. That's the way I look at it. So you got when Meta was maybe $300 Tuesday, I don't know where it was Tuesday, but I sold, for example, a 270 strike price put, and I hedged that by buying a 267.50 put. Now, the way this works is I got paid more for the 270 put I sold than I spent buying the 267.50 put. But just selling that 270 put, that brings in instant cash, right? Now, people say, wow, you got to put. Well, so what if somebody puts Meta to you at 270? Well, no one's going to do that if it's over 270. Right. So you know what I mean? Their fear is like, oh my God, I sold someone the right to put the stock to me. Oh, you know, I even had a guy ask me, like on this Meta trade, well, what if somebody wants to just put it to you out of spite? And I'm telling them, man, the market doesn't work like that. No one's going to just stick it to you at 270 when they can sell it in the open market at 310. You know,
I think that's probably one of my guys that bought gold that didn't take the profit, 160,000. Same guy.
Yeah, man. Like, you know, so here's what I try to tell people. I try to reel them in on all these crazy thoughts. Like, what if somebody just puts it to me out of spite? Here's the thing: there's possible, and then there's probable, right? So it's possible you're going to get struck by lightning when we walk outside today, but it's not probable. Mm-hmm. See what I'm saying? So, you know, yeah, the guy could sell it to you at 270, but he's not going to do that if he could sell it for more in the open market. So that's even when you talk about teaching people on the sell side, a lot of time they get scared, right? And they got this misplaced fear. Like on this Meta trade, I just don't see anybody putting the stock to me at 270. I don't know where it is right now, and I don't know where it's going to be tomorrow, but I believe it's going to be above 270. So when I put that trade on, that I got like 6% for however, how much money you put in, 10 grand, 20 grand, 5 grand, a grand, 6% I got on that. Now, that's what I try to do every week in that 5% range. And that doesn't sound like a lot, you know, but it adds up. If you got the probability on your side, like we do, I think we got like a 97% success rate on these trades. That's 5% per week. That's nothing compared to what you could possibly make buying an option, but you're probably not going to make anything buying an option, right? So it just
how much time does it? It sounds like there's kind of two major movements. You get in and you get out, but is there scaling involved?
Scaling. So the beautiful thing about this is that you can put an order in to sell the 270 put and buy the 267 put at the exact same time, and you can even put just a limit on the net credit you want, because you're always going to get more for the put you sell than you spend on the put you buy. So you can look at that whole options chain and see the difference and what the gaps are between the bid and ask and where the midpoint is. And you can just see it's all listed. And I look at this and like, this is a list of money the market's willing to give you to make this one transaction. That doesn't exist in the stock market. You're taking all, you're up a penny, you're down a penny, you're winning and losing when you buy a stock, right? Mm-hmm. So you don't have that. Now, Meta, I don't know where it is today, but it can go down, right? It can still go down, and I still don't have any risks. I don't know any other strategy where the stock could go up, down, go down some, or go sideways and you still win. Mm-hmm. So it's 3 out of possible outcomes. I'm mostly a winner, and I love the odds, you know. Another thing, I just don't want to forget to tell this one story, is I like telling true stories. And when I had my second fund, it was tough. We were really grinding hard. We were doing as much day trading as we could. We weren't holding positions overnight, and I was getting real burned out. And one of the guys that I used to work for that sold his brokerage firm, he was telling me his buddy from the CBOE, Chicago Board of Options Exchange, was coming in, and they wanted to go to lunch, and they picked me up in front of the building my office was in. And I go down there, and the guy's in a limo, a stretch limo, and he put his kid, I was in Boulder, and he would put his kid through CU. And we get in this stupid big long stretch limo. You don't have these in Boulder, people are, but it was wild. So we're driving to lunch, and I'm talking to this guy, and I say, so how would you just, summarize making all your money? And he goes, selling options. And man, I am busting my stuff over here every day, doing hundreds and hundreds of trades, risking crazy amount of money and getting kind of nowhere, feeling like I'm treading water, making a little bit. Here's a dude in a stretch limo on the sell side. That really hit home, especially because I was very successful, but nowhere near where I wanted to be. I just was not satisfied. And when I start talking to this guy, man, it just I had that aha moment to where, I'm gonna eventually flip over to that other side. And it all started with selling covered calls on stocks that I already owned. That's the very first place they could do that today.
I still do that.
Yeah.
I still do covered calls. I mean, I guess I'm a basic kind of guy, but to me,
I do that too. And sometimes you could take that premium and buy more stock. That's
especially in these markets where everything seems to be buoyed, you're constantly just taking premium.
Constantly taking premium. And the other thing is, now I don't want to forget this either. Since last year, and really since the pandemic, the volume in options has exploded. We were talking about this with Tony Salibi. He's a member of the CBOE. He was talking about how in 22, they doubled volume across the board from where 21 was. And then 23, probably in the first half of the year, they doubled all of what 2022 was. And this is all from two sources. One, institutions, they're very, hedge funds were and still are very skeptical to buy a stock. So they also have the fear of missing out. So instead of buying the stock, they're buying call options, right? NVIDIA, Meta, you can just see it, Tesla. Now you got that coupled with the mom and pop retail traders are just exploding on the buy side of options. So you got institutions, you got the mom and pops, both pushing up premiums to levels I've never seen in my life. Now, here's a little tip I'll give you. Are we running out of time? If you're looking at a covered call, take any stock you got, or just do it on Tesla. I'll take Tesla and then take a 10% higher price than it is now and look at a strike price on Tesla on a call that expires in about 30 to 40 days. Whatever that price is, divide it by the price of Tesla and you'll see what your yield would be on a covered call. And it'd be twice that much if you bought the stock on margin. But that's the very simple way to see how high options premiums are. And you can compare that to other options on other stocks. But that's the real simple formula. And that's also the formula I personally use for selling covered calls. I like to look at a strike price that's 7 to 10% higher than my cost or my purchase price, with an expiration about 30 to 40 days out. So I could do it possibly 12 times.
That's an interesting, because people are wondering, how far out of the money should I be going? And
10%.
Yeah, and you've just answered that question.
So
let me ask you one question that about new people or resistant people to options. What's the one piece of advice that you can tell them with relation to income? Because I think that's really where people need to start. I always found that if people have early success, then they really open up to listening, and they want more of that success. It's just like when most people are not successful, they go down that road. They take a break, come back down, and go through the road. But to get early success, I think the income thing is the direction you really want to go. So what would you tell new people who are maybe resistant to that?
Yeah. All right, great. Well, just the same way we just picked that option, watch the value of that option for the next 30 to 40 days. If the stock goes up, it'll go up. If the stock goes down, it'll go down. If the stock goes sideways, it'll go down. If the stock doesn't make a significant move, it'll still go down. And then in the last week of options, time decay kicks in the most. So I would tell people, instead of looking at the buy side, look at some options, write them down, write the price down and the date down, and just watch what happens as it goes through its life. And I love selling options while they have a little time value, and then watching them expire worthless. That's like one of my favorite things in the world.
Yeah, I think that I told you about we were only buying premium, which is why everybody was losing. When the company when we all left the company at different times, one guy started a firm where all he did was sell options. That guy became very successful for a very long time. So he proved right away that selling options really is where where you want to focus and not be the guy with the dream, just buying premium. David, is there a question maybe that we can answer real fast before we wrap it up? I don't know if you've been looking at the questions. Is there one or two in there that
Absolutely. We have something here from Nathan. He says, it seems like really often now we're getting big spikes in stocks or sometimes big drops, but then by the end of the week, they're flat. So no one's really making money on those, but making money off the stocks that don't go anywhere is amazing. So not so much a question, but more of a, I suppose, a testimonial to Jack's system.
So I'll tell you something about that right there. That's volatility. You got that, right? Stocks got a big spike, then in the back, and then they went nowhere at the end of the week. But that volatility, that really jacks up even more the premium you could get for selling it, because a stock that has good options has to have two things. It has to have directional bias and some volatility. If it doesn't have any volatility, like AT&T, there won't be any value in the options. So how do you measure volatility? It's beta. Even if you go to Yahoo Finance and look at a quote, you'll see what the beta is. And a stock that has a beta of 1 means it's just as volatile as the broad market. The broad market has a beta of 1. So if a stock has a directional bias and some volatility, meaning a beta over 1, that's going to be a great stock for trading options for income. Like Meta. I'm not buying a stock, but I'm using that stock as an asset to create income in a really short.
For the beginners, I think it's important that they understand that the value of the premium that you're buying or selling is really a combination of the intrinsic value, which is the answer to the question: how far are we over? How many dollars are we over my strike price times 100 for each option, plus any time value or excitement value, that volatility value. So you've got that's really the value. Now, when you're dealing with out of the money options where there's no intrinsic value, then it's all this time, how much time is left on the option, and what's going on with the volatility. So those are the two things that really spell the value of the option, and the energy behind that can be different also. Expectations and so on. This is why sometimes the market will move and the premium won't move as much as you would expect with that move. So there's always tempering going on, but what you're doing when you're creating income is trapping. You're taking a look at what's going on and you're trapping the income when it's there, as opposed to just.
I love that. Love that. Write that down, everybody. I'm going to write that down. Keep going on that trapping income. That's beautiful.
Well, that's the whole thing. When you can trap it, and then from then on in, you're either going to grow that or defend that, but you've always got it in your. This is where you want to design a combinations, whether you're doing calendar spreads or the kinds of spreads that you do. And I think we'll get into that in successive weeks about this, because there's so many things creative things that you can do with options that that you're an expert at. So I'm going to kind of be drilling you a little bit on it from week to week.
Yeah, great. And there was a question about debit spreads. No debit spreads. And my goal per week is in that 5 to 6% range. I think somebody wrote down that I go for 2 to 3%. No, I'm going for 5 to 6% or more. Some of the monthly ones are higher than that. But yeah, that's where it's at. And see, a guy that buys options, he wants to get 500%. He's like 5%. I don't want 5%. But, it's just like picking up that money, constantly picking up that kind of free money from premiums. That's my
Well,
game.
that goes into the mental part. I mean, this is what I'm always thinking about. If you can just create small wins, what happens with the small wins oftentimes is that when you're expecting a small win and you get a bigger one, that's much better than expecting a big win and then being disappointed. It's kind of like the guys, I was watching a little CNBC today where they were talking about how Disney, Iger he's very smart in his projections on the slow side, so that when the money comes in, he underestimated as opposed to doing it the wrong way. And that sensibility, that perception is a perception I think that you need in options in order to really benefit and keep your head together. Don't expect much and let the option do its work.
Yeah, stack it up. That's right. Moneyball right there. I saw somebody say, yeah, that's right. Now, last thing I'm going to give you, confidence. Okay. Right now, I talk to thousands of people, as I'm sure you do, Norman, and confidence, self-confidence is at a critical lack of people have a critical lack of self-confidence. And that's natural because most of them got beat up pretty bad in 2022. So the thing is, when you start stacking up these small wins, like you say, not only does that turn into real measurable wealth, but maybe even a better benefit is that it gives you a lot more self-confidence. And that's one thing every trader needs right now is more self-confidence. So when you got a strategy where it's easier to win, like on the income side, that's also going to boost your confidence a little bit. And I think you could talk about what that would do for your emotions, right?
Yeah. Hey, you did a nice job today, Jack.
You did. DA did. That's DA.
Excellent.
Yeah, DA did it all. The producer. They never get enough credit, do they?
They never do. He's the boss, man. I love this guy.
Thank you guys. I appreciate it, but really you've made my job very easy. You guys have a great rapport, you have great info, and that's what people are here for. So thank you for sharing what you've shared today. Any last things you want to say before I just recap what we've learned and close down today's episode?
I think that's it.
I think that's it. I kind of enjoyed the fact that we both appreciate the fact that you can't do anything unless you're confident. You've probably said it 20 times in this half hour, Jack. And I'm the guy that usually talks about confidence. But unless you have confidence, none of this is going to happen. But you have to have a process. That's what Jack's all about. So I think between the two of us, I think we can really help some people.
And you got to be disciplined, Norman. Like you're saying, you got to have your emotions under control. So yeah, I think this is a good match. I think people are going to love this show.
Thank you, guys. Absolutely. I can already see it in the chat. People love it. Thank you, guys. Please send your thanks and send your future topics you'd like to cover in the chat to Jack and Norman. Jack and Norman, thank you.
Thank you, Norman. Thank you,
Have a great day.
Thank you, everybody, for being on here. Can't wait to help you out some more. See you next week.
All righty. All right, folks. Today we learned a bunch of stuff. I took some notes here. Just going to quickly scan over them. Income should be first. Speculative comes later. One big thing that Norman said, people don't look at the stats of buying options. Your odds are terrible compared to income trades. That was a quote by Jack. Options are a zero-sum game, meaning that for every buyer, there is a seller. And as Jack just said, sellers have much better odds than buyers. Another one, people keep banging their heads on the buy side rather than exploring the possibility of income. The wins may be smaller, but they're more consistent. And at the end of the day, that's what you're looking for with income. He also covered what is income trading. And he said, as opposed to stock traders who look for capital gain, income allows you to use an asset to bring in income instantly by using options. Also important to change your mindset. Look at an options chain as a list of money that people are willing to give you if you take the sell side of that transaction. And something that Jack said he was going to write down, trapping income. You get, once you focus on income, you can grow or defend that, but you've always got it. That's where you want to be. There was probably a lot more. If you guys want to hear it, there's going to be a replay. Just stay tuned to your email. We're going to be sending that out. And as I said, thank you for joining us. If you have a future show topic, I see some being dropped in the chat already. Thank you, guys. I'm going to grab those before the chat closes down. But that's it. Going to be closing down this show in about 30 seconds. Last chance to drop a topic in the chat. I see a question here. When will the show recording be posted? We're going to aim to have that. Let's see, it's 12:35. It usually takes an hour or so to process. Let's say later this afternoon, mid to late afternoon at the latest. And that should go out by email. If you got the invitation to this show by email, you should also be able to get the recording by email. If there's any trouble at all, just show up to here. Let me put this link in the chat. Just bookmark this link that I'm sending. Whoops. Bookmark that link that I'm sending. Put it on your calendar for 12 p.m. Eastern every Thursday. And you can just show up to the show next time. If you haven't gotten the recording, you can always ask for it there. And that's it. Thank you, folks, for, all right, I see someone joined the Telegram. Fantastic. Thank you for all your questions. Thank you for your attention, and signing off.